Hey guys, welcome back to the channel. Welcome back to another video. Yesterday we got the CPI numbers from the Fed, and crazily it went up to 8.3%. Certain parts of the report, explained why, but it was just strange that it went up. Like I said, in previous videos, guys, this thing's gonna get worse before it gets better. And it was shockingly this morning. I was shocked when I got up and I looked at the market and everything was taking off in the green. I'm like, wow, economy's not getting no better, with inflation and stuff. They're trying to fix it. What gives? So still looking at the thing, I noticed that everything has flipped down, checking out CNBC. Now, what can you do in times like this? Like I've had another video where I talked about my recession strategy and what I'm doing, and it might be subject to change. But I mean, it's a pretty good video about, my strategy. I'll leave it in the description box below. You can check it out. But what I would do, honestly, right now, and like what I'm leaning towards doing, I mean, I was doing it anyway, but I'll just mention it again. When you're dealing with something like this, if you're a new investor and you've never been through this before, this is normal. This won't be the first time, and it won't be the last time that these type of situations are going on in the market. Inflation, the economy, such as life. This is how it is, especially when you're just dealing with business and just dealing with employment, just such, right? Nothing you can do to stop that. What you can do is you can do certain things in your portfolio to lessen the blow. And one of the things you can do is concentrate on, companies that are like not sensitive to economic, sensitivity, right? Like basically like stocks that are like unaffected by interest rates, or basically interest rate sensitive stocks. You want to avoid those type of stocks. Now, what I do to avoid those type of stocks, right, is I put a lot of money that I invest, and like this is what a lot of people preach to you, especially some YouTubers that are in the long-term value investing. Especially if you want to hold stocks for 10, 20, 30 years and so on, you want to put your your money in stocks that are basically blue chip companies. You might have heard the term dividend aristocrats, right? That's companies that have delivered a dividend year in, year out, regardless of the economic, situation for years. I think it's 50 years they've been doing that. 50 years straight now we talking, companies like Procter & Gamble, Cisco Foods, I'm trying to remember, Target, Coca-Cola is another one, right? These are all type of stocks that, perform no matter what the market's doing, up, down. You can be dependent on these companies delivering, you getting your pay every 3 months or whenever quarters that they report, and give out their dividend. You can always rely on you getting paid, right? Companies like healthcare, certain retail stocks, like I named one, Target. Target's a stock you can invest in. Stocks are going to go down, and when the market's all red, there's nothing you can do about it. But like the reason why I'm bringing these stocks up, guys, these are stocks that will lessen the blow. You could focus on companies that are, like basically like when you're dealing with this, like you want to deal with like two factors. When you're dealing with companies in hard economic times like this, companies that are they're focused on profit potential. They have profit potential, right? Can they make money now, even with the conditions where they are? If it's a service company, can they pass the prices on to the consumer without it affecting their bottom line and keep them afloat in times like this? Those are the type of companies you want to deal with. On the cash flow part, as far as companies with cash flow, do they have cash flow? Do these companies have cash on hand, free cash, right? Do they have do they have the ability to manage their debts no matter what comes their way, because they have enough cash to where they can fully operate the business and still manage their debt? A lot of companies like that, healthcare companies, like I mentioned before. Now, a couple of these companies I'm about to mention to you, well, not companies, but these type of sectors and businesses, a lot of them don't fit this criteria, but we just talking about right now, in my opinion, and how I'm feeling about it with the way I'm doing my investments. Now, like I said, I'm not an advisor. I'm not telling you to do this. This is what I'm doing and what I'm looking at. Of course, everybody looks at the market differently. So this is just my perspective of where I think things are going to go prior to this bull run. Now, like we say, we're looking at healthcare, right? I like natural gas. And the reason why I like natural gas is a lot of it has to do with the turmoil that's going, across seas, with the situation with Ukraine and basically all of Europe now, because they're having the energy crisis over there with what Putin did, with the Nord Stream 1 pipeline or whatever it is over there. I like natural gas. I like credit card companies like Visa, MasterCard, companies that, they make money off of transactions. People are going to always spend. So and a lot of people don't carry cash no more. So these companies, it works to their benefit because, they get paid when it's a swipe, smaller banks. I have a company that I'm invested in called Regions Bank. Gives a good dividend. You know what I mean? And it trades at a low price right now. And I really like Regions Bank. It's worked out well in my portfolio, and it might be worth taking a look at. But yeah, I mean, dealing with these type of situations, it's not as bad. It's not as bad as you would think. As an investor, if you look at what's being said, you hear it, but don't listen to it. That's one of the things about, when you hear things on TV, a lot of it can be misleading because remember, they're on TV for hours at a time. They need something to talk about. They got to give you the positive and the negative, and a lot of times the negative sells. So you got to be careful about that. But I mean, guys, that's basically it today of what I wanted to talk about as far as this topic. This right now is the best opportunity for you as an investor to build your wealth. Don't let nobody tell you nothing different. These stocks are coming down. We got a pending railroad strike, right? Or a looming railroad strike, which I hope doesn't happen. But if you just look today, some of these railroad stocks that went down 2-3%. And railroad stocks are one of those stocks where it's a slow crawl, and they constantly go. As long as the industry's going, as long as American industry and everything's going, these railways are going to go. If you look at the chart, from the beginning of their existence all the way up now, their importance has grew, and so has their price. And it's a steady climb on the chart. So if some of these railroad stocks go down, guys, and this is a little bit off the topic of what I'm talking about, it might be worth your time in investing in them because a lot of times these stocks don't have a volatility like other stocks. These things just constantly go up. But yeah, I mean, that's neither here nor there. I just want to share a little bit about that. But yeah, keep calm in times like this. Do your history on your stocks. Do your homework. You pick these stocks for a reason. You have a plan. This right here is a temporary setback. It's not the end of the world. You just wait it out. Storm is coming. Let it rain. When we're done with that, we go back to normal weather. Go back to the bull run. It might take a year, might take 2 years. You just do what you have to do to make sure that when this thing takes off, you could say you'll feel good inside knowing that you did what you were supposed to do. You stuck to your plan and everything worked out right for you. Trust me, this is how you build wealth. I've done it in the past. A lot of the stocks are at lows or lower than when I bought them years ago. So I'm excited about that. There's always something to be excited about. Just calibrate your portfolio to where, you're not taking that much of a hit. Try to get it as well-rounded as you can. Diversify. Don't sell your stock no matter what. You keep investing and you guys will be all right. I'll see you guys in the next video. Remember, always leave me a comment. Talk a little bit about it. Share the video so other people hear about the video. And I'll see you in the next video as normal. You guys be good.